So Jerry, tonight, a lot of our small wedding businesses that are just starting out, or even some of us who have been in the business for a little while, we get to that point of needing to have some capital to do things. And of course, from your banking, you've seen loans from big to small. Let's kind of dig into someone who has never really gone and was seeking funding. Where should they really start in that process?
Okay. The first thing they've got to start in the process is they've got to have budget or financial information. That's number one. And most people, they don't look at what is really important to us in the banking industry or any financial institution in terms of we need to make a decision that we're going to get paid back. No matter how you look at it, it's ultimately, we don't care about collateral. That's secondary. Your character is secondary. What anybody cares about, whether it's a bank, credit union, financial institution, we got to get paid back. So what you're really looking at is how comfortable can you make the person that's making the decision that you're going to pay this money back plus interest. Mm-hmm. That's what we're looking for. So the first and foremost thing is having a very good handle on what it costs to run your business. Any banker, any financial person, any company that is looking to give you credit is going to look at, from the business of a small business, is do they understand what it's going to cost them to make money to pay us back? So that's number one. Number two, how are you personally? How are you handling the business personally? What is the wherefore that you've had to put into this business when you get it started? One of the biggest issues today for small businesses, and I'm going to talk outside of COVID-19, so let's just kind of put that aside and think about 2 years past, 2018, 2017. What we wanted to know is, what did you put in this business to start? And what do you have put aside when things go awry? What can you fall back on? So your personal net worth, your personal fallback, as we call it, is also important to the bankers too. So I'm going to walk through that piece of it when we get to the actual application process. So I don't want to confuse people out there. Mm-hmm. Whenever you start a small business, you have to have some capital. You have to have an equity investment in that business. We're looking for, if we're going to get involved from lending you money, what have you put into this business personally to get it started? I will tell you the highest failure rate against business owners is those that have not put enough of their own capital, that is cash, into the startup of this business and having some money put aside for a rainy day. And again, let's put the whole COVID-19 situation aside.
So you're not saying that sweat equity, while having a value, I mean, you're talking cold, hard cash put into the business.
Right. There's an important thing. Sweat equity is a good basis, but it doesn't repay the banks. It doesn't repay the loan. It's not going to pay the creditors. It's not going to repay what you own. The biggest business failures out there from terms of financing are those that are called leveraged. And there's a leverage ratio that we look at. The more leveraged your business is, the more you have debt on a business, the more likely you're going to be to run into struggles when there is an economic downturn, when there is a crisis, when there is a problem, when you can't get customers to come in and buy your services. That's where that really impedes your ability to be able to sustain your business and be able to manage through the tough situations.
So obviously you can have some debt, maybe here or there, credit card, what have you, but having too much obviously becomes a huge issue.
Yep, and banks use what we call a leverage ratio, and that is a 3-to-1 leverage ratio. Really kind of compares how much do you have in assets to debts. So if you have $3 in assets to every $1 in debt, that's a well-balanced company. So that's what we call a debt leverage ratio, and a lot of banks use that to gauge how well the company is going to weather through the storm of different changes. We call it stress testing often.
So let's just throw some numbers at this. So let's say I have a wedding business that has $25,000 in assets, and I have no debt. Is that meaning that you guys would look at saying that a person could have up to a third of, for a loan for about a third of that 25,000 type of thing?
Right. Yeah. That's a tongue-in-cheek rule. Yeah. A third of that would be what we call a leverage ratio. And that a third of that debt against 25,000 in assets is comfortable for anybody in the financial industry.
Gotcha.
Yeah.
Gotcha.
So let's kind of walk through, if we can, John. You're ready to go to a bank.
Yes.
You want to go borrow money. There are key mistakes, and I call it the 10 top things that often will not get you a loan. Okay. Number one, if you can't properly fill out a loan application clearly and be able to answer every question on that, you are going to get denied. Loan applications are created so we understand why you want to borrow the money.
Mm-hmm. If
you leave questions blank, if you don't tell us what you're doing, I mean, here's one I often laugh at, and this is years ago. People, I would say, and it would be a question, how much are you applying for? As much as I can get.
Alrighty, we'll get on that.
Not going to happen, okay? If we can't read your application, we don't need to know the name of the business. We don't understand what you're borrowing the money for, okay? You need to take the time to fill out that application. Part of that application is going to be a personal financial statement. We are going to ask what assets you have personally, the value of your house, the value of your DJ equipment, the value of your photo booth equipment, how much money you have in the bank, okay? The biggest mistake a lot of people make is they'll say, okay, what's the balance in my checking account? And what they'll do is they'll open up their online banking and see they have $50 in their checking account, and they'll write down $50.
Mm-hmm.
Think about what's been your average collected balance, okay? What do you averagely keep in your checking account? Do you keep $3,000? Do you keep $4,000? Do you keep $10,000? That's what we're looking for, is that number there.
Sure.
What do you have in retirement? What's the value of your real estate? What's the value of your automobiles? Do you have any retirement plans? Do you have a 401k plan that you took from your previous employer? All those questions are important because we'll get to know what your net worth is. What are things that you can fall back on? The most important things we're looking for is the balance of all your bank accounts, the amount of credit card debt that you have, if you have a mortgage, and what do you have in retirement funds? Don't tell me you have a 100-bottle wine collection that's worth $5,000.
I got this baseball.
Yeah. You drink the wine, it's useless to me, okay? If you drink the wine because it's now hard times and you're upset, I can't go and sell the wine, okay? Personal furniture, personal assets, look at what your insurance bill is. If your household belongings are insured for $50,000, that's the value of your household assets. Mm-hmm. Okay. So it's important. Take the time to fill that out. All right.
So now you've mentioned that's all personal assets. Now, does it matter if it's a sole proprietorship, an LLC, or a S corp that we talked about this in a prior show? Would you still look for that information regardless of which type of business structure was?
Right. We're still going to look for it. We're going to look for what it is because you're going to be a guarantor. And on the personal financial statement, it's going to ask you for the value of your business. What do you think your business is worth? What do you think the assets of your business are worth? It's part of that personal financial statement. Then we're going to ask you for information on your business. We're going to ask for an income statement, and we're going to ask for a balance sheet. So what is it that you have? So if you have DJ equipment, photo booth, all of that are assets. Deposits from clients, that will be an asset. Liability, credit card debt, rent for your commercial office space, lease payment on the van for your photo booth business or your DJ business. We're going to look for those pieces of information. Mm-hmm. We're also going to look for tax returns. If you've not filed tax returns for a couple of years, you're not going to get a loan.
Yeah.
Okay? You need to be current on your tax returns, and you need to be able to explain those tax returns. We may look at a line item and say, okay, tell us what this is, because on a tax return, we're going to add back certain things. We're going to add back depreciation. We're going to add back owner's income. We're going to add back interest expense. There are some discretionary things that we'll look at that say, you know what, this was a tax write-off, but it was really income to the business. We call those non-cash transactions. All right. Be able to explain about your business, be able to understand where your revenues are coming from, be able to explain where your expenses are coming from.
Mm-hmm.
You know the business. Credit, personal credit is huge. That's going to speak to your character. We understand things are going to go awry in your life. Medical collections, a lot of times we just dismiss those. But if you have tax liens, we really look at the past 2 years. Have you had any late payments? You may have a 30-day late payment to your Lowe's credit card. Hey, the bill got lost in the mail. I forgot. I totally spaced out this month. An occasional 30 or 30-day late payment. You start getting 60, 90 days late, it's going to raise some eyebrows on a banker.
Sure.
A typical credit score of 680 or better, you're going to be okay with the banking industry. Don't sweat it. You're going to see a variety of credit scores. Also, don't bank 100% on that credit score. If you come back to me and say, well, I've got a credit score of 800, I should get credit anywhere. Yeah, that's great. You've got a credit score of 800. There's a lot of factors that drive that credit score. Okay. We don't know what the logarithms are, the priority at GRW, Experian, all the different credit reporting agencies. What we look at that is your ability to handle credit, to manage credit, and to pay credit. So that drives towards your character. Again, we're going to go back to the bottom line of the business. Are you producing enough income that you can pay us back? I often tell people in the banking industry, for every $100,000 that I've got to charge off in loans, I've got to put $5 million on the books. So when a banker looks at it, they look at it from that perspective of, if you don't pay me back, how much more do I have to write in loans to make up what you did not pay us for?
Mm-hmm.
So that's what we're really looking at. It comes down to the bottom line. When you're applying for a loan, the ultimate decision is, do I feel comfortable enough that this person is going to pay me back?
So how much of this is there any gut from your side of it, or is it just a numbers thing?
No, there's a gut reaction. And let me break this out. When you're applying for a credit card, it's a numbers thing. It's credit scoring. When you're going to a bank and you're actually talking to a loan officer, a lot of times it's a gut reaction. It's how we perceive you are managing your business. So a lot of it from the loan officer's perspective is they're getting to know you. They're getting to know what you do and how you run your business.
Mm-hmm.
Okay. If you go in there pleading that, if you don't give me this loan, my business is going to go sideways. I'm never going to make any money. You have to make a loan for me. Loan officers can look and say, I don't have to do anything. Okay. And I don't mean to be callous in that. And I please understand, but that's what we go through. We want to get to know the person. Does the person have a good handle on this business? And do they understand what it's going to take for them to be successful? So a lot of that, when we go through the interview process and we visit a business, or we get to talk to the owner over the phone in cases like today, but in the past, when they come and sit in the office, we're looking at the body language. We're looking at how they're interacting with us. A lot of that goes to the character of the business owner.
Sure. It kind of flashes me back to the very first experience I had with a bank as a 16-year-old. I had a lawn mowing business. I mowed with a push mower for 2 years. I went to the bank, and I don't know why there's like no money at that age. And I sat down and said, I'd like to take out a loan to buy a big riding lawnmower, which at that time was like $1,500.
Yep.
And yeah, I had none of those things that you've been talking about. A small town banker who had a gut feeling, I guess, is what did it. Because yeah, at 16, I have no credit rating. I have none of this and none of that, but it was a gut thing for him.
Right. Here, I'll share an example. We're going to go outside of the industry. I was lending and a gentleman came in my office, wanted to start a surf shop. And this was in Algonquin, Maine. Well, I had just moved up to Maine, so I had no idea. And all I'm thinking is surfing, Florida or California. Mm-hmm. Okay, this guy's walking in and telling me about he wants to start a surf shop in Algonquin, Maine. And so I'm looking at him, and he had a whole business plan. He actually spent 6 months working for Ron John's down in Florida. not only did he go through working at Ron John's down in Florida, but he also worked doing research, doing information. We sat and talked for an hour. And at the end of that, I had not even looked at any of his financial information. He got up from my desk and I looked at my assistant and I said, you know what? I'm going to find a way to make the loan for this guy. And actually, I made him a loan. It was about $25,000. Today, he is one of the most successful surf shops on the East Coast. He is well known. He has 2 locations, okay? Known nationwide with his reputation. And he took and he built from a small location to a much larger location, well known here on the East Coast. And every time I walk in, he goes, wow. He said, you know what? You really took a chance on me. He said, but I felt confident walking out that I convinced you that I will pay you back. And since then, I have made multiple loans to this individual over the years to help him acquire his locations, buy real estate. But that was kind of the relationship that we built. And it was funny, when I went to my boss and I said, I'm making an X loan to this person who's going to start a surf shop, he looked at me, he goes, are you serious? And I said, I said to my boss, I go, I said, I really have a good feeling about this individual. He came in prepared. He knew how to discuss it. Now, on the complete flip side, okay, I had a gentleman who came in who had just graduated chiropractic school. He wanted to be a chiropractor. So part of going through this, and this was in New York, they helped him sort of write, it was a business course, how to go in and apply for a bank loan.
Okay.
They handed him a notebook and said, this is what you need to work on to go through the bank. Well, he interpreted it as, you did all the work for me. So he comes into my office, sits down, and says, I want to, apply for a loan. He said, here's my business plan. And I start looking through it and I go through the page. It says, insert name here. And it was all of the blank documents that he needed to do. I said, did you prepare this business plan? Oh, yes, I did. I said, so the name of your practice is insert name here? And he looked at me and I just said, he goes, uh-oh. And I said, yeah. He goes, I guess I didn't do my work. I said, no, here, why don't you take this back, go through this, and then come back and see me in a couple of weeks and we'll start the conversation again.
Oh,
you have a lot of funny instances like that. But again, the most important thing I can impress upon is you've got to know your business. You've got to know your market. You've got to know where you're going to go in that business and being able to understand your financials. For those of you guys who are larger businesses, multi-level employees, multi-level photo booths or DJ businesses, and you have an accountant preparing your taxes, don't turn to a banker and say, well, I don't know what the accountant did. I just give him the information and he figures it out. The banker's going to sit there and go, then you don't care about your finances. And you're asking me to put my judgment and my confidence in you that you're going to be able to pay me back. Those are the little things that kind of trigger a banker. And again, you're selling your business. You're selling the ability and the confidence and the trust that you're going to pay us back.
Jerry, we've only got a couple of minutes left because we want to switch for the next show. Are there multiple types of loans that a small business might come to you for? And give us a little overview there.
Yeah, there's a number. There's working capital loans, which is permanent working capital, things to buy equipment. Okay, I want to go buy 6 new roving photo booths. That's an equipment loan. It's fixed payments over a period of time. There's lines of credit. That's short-term working capital. That's to get you over a hump. Photo booth company, hey, you know what? I've got advertising. I've got stuff during the wintertime where income comes in, but I still have bills, so I have that line of credit. And then there's your real estate financing. Hey, I want to buy an office space for my business. Where can I acquire this office space? So those are the basic loans that we see, especially for our industry, for the wedding industry. The venues out there, usually it's to buy real estate. And those are the 3 typical type loans that we have, whether it's through the SBA, whether it's through the bank, or whether it's financing it through a credit card.
Excellent. Excellent. Good information, Jerry. Thank you very much for kind of helping us to look at the different things we need to get into seeking financing for our business.
And again, because of my dual life, anybody out there that is going through the process and needs any assistance, I'm limited in where my team can lend, but certainly I can always give you some advice as to what you need to do when you're applying for a loan.
And the best way to reach you is
through jerry@maindiscjockey.com. That's the best way to get me.
Excellent. Maine, as in the state Maine, disc jockey.
StateMainDiscjockey.com.
There it is. All right. Sounds great.